Hello traders, Gary Wagner here at just about 12 noon in Honolulu, 6 o'clock in New York. It is Tuesday, May 26, 2020, and this is the daily report for gold and silver. U.S. equities climbed today, gaining about 2% in the Dow Jones Industrial Average, 1.5% in the Standard & Poor's. That took the precious metals under pressure, even with dollar weakness. We saw gold sell off by about $30, trading to a low of $1,700 today. On today's show, we'll talk about our trade, which we were stopped out of, but first to the price board. Gold sold off sharply today, trading down by $32.30, net decline of almost 2%, breaking below some critical key levels of support, trading to a low today of 1,700, settling at 1703.20. On a short-term basis, and that's what this chart is in the left-hand corner, we can definitely see the level. This is just where our stop was, just below there, 1715.80. And when it broke through 715, of course, our stop was effectively hit. We are flat with no active trades, and on today's report, we will definitely talk about key levels that we need to watch. It was very interesting in that not only did we see gold futures, this is the June contract, sell off sharply, but when we look at spot pricing, that is now above June futures, and that closed down $16.18. And that closed at 1710.20, and that was all aided with some real dollar weakness. That weakness, of course, added to the value of gold, and selling pressure took away value. So that when you look at the Kitco Gold Index, what you will see is that when we took this screen print, the last bid was 1710 in terms of spot pricing, and that's right where we're at. A decline of about $32.85. However, dollar weakness added $15.55, limiting the total decline in spot gold to $17.30 today. Platinum also traded lower on the day, down $16. It's currently at $870 per ounce. Palladium, which was trading slightly higher, closed lower, $1971.70, down $5.40. And lastly, silver declined by a total of about 13 cents at 1756 and change, down 0.75%. Let's take a look at our technical studies. I want to look at two different daily charts on today's show. The first one that we're looking at contains upper level resistance and lower level support trend lines. You can see that drawn in black. This is our upper level, and I have been calling this really what's called a flat top, in that we've had a level of resistance that comes in anywhere between, call it 1750 and 1775. That's these series of tops here, of course, with the brass ring being still at 1788, but we've got a correction to consider, because when we look at the lower level trend line, we can definitely see, and I've drawn it primarily off of these bottoms right here. As we extend that, we can see that we definitely had some chart damage as the market closed below that critical level, and that level occurred roughly at 1715 to 1717. This is the 21-day exponential moving average. It clearly broke through there. That was sitting at about 1725, but it's still trading well above the 50-day, which tells us that on a short-term basis, even though we're in a corrective mode, it's still holding a longer-term bullish demeanor. But we have some critical levels that we have to hold. First of all, we've got that important psychological level of 1700, and what you can see is this is just below that price point. The actual low today was 1700 precisely, and that held. Market is currently trading 1703.20, and that is critical, as you will see in our next chart, which contains our Fibonacci retracement. As you can see, I've put up a daily chart with a single fib retracement, which begins just about when the pandemic hit the United States, in other words, the middle of March, up till these tops at 1788. However, the first key and critical level that comes in is at 1709. We broke through that and closed below that. So that to me is significant. What that tells me is the low today, which was 1700, is a key area. If it holds this area, it gives some hope short term for the bulls. However, if it breaks through this area, as it has broken through the 23.6% fib retracement level, the next really strong support level comes in at around 1660. That's the 38.2% retracement, with this low just above it right here, and this low here that we'd want to watch at 1675. So you would have these areas that we would want to watch, 1675 and approximately 1670 based upon this low here. Other than that, we are going to go in after Memorial Day weekend taking a loss. I'm sorry to report that, but we will be flat with no active trades in gold or silver. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow on Wednesday for the next daily update and review. Bye-bye.